cordial welcome, ladies and gentlemen, on the occasion of the press conference of Wienerberger AG for the presentation of the 2016 results. CEO Heimo Scheuch and CFO Willy van Riet are going to present the most important strategic and financial developments in 2016, and they will also give you an outlook for 2017. And then they will take your questions. Please make sure to use a microphone for your questions because this event is being webcast. So, over to you, Mr. Scheuch. Thank you very much. Speaking on behalf of Willy van Riet and myself, I would like to wish you a good morning. It's the ball season in Vienna, and this is a beautiful ballroom. It's not exactly the State Opera, but a hotel. So, once again, a cordial welcome to our Investors and Analysts conference for the presentation of the results of 2016. 2016 was a good year for Wienerberger. We were able to more than double our net profit from 37 million to 82 million euro, so a steep increase in net profit. We also increased our organic EBITDA by 9%, highly satisfactory, particularly against the background of the previous year. One-off effects such as the EU referendum in the United Kingdom or the decline in infrastructure activities in Eastern Europe. So 9% is excellent against this background. And you know us. We both focus on free cash flow. We've always done so in recent year. And this year again, we generated a strong free cash flow, which was almost doubled to 247 million. This also has an impact on our dividend. We're going to propose to the AGM in May this year to distribute a dividend of 0.27 euro. That is an increase by 35%. And we are clearly within the range of between 10 and 30% of the free cash flow, which is to be paid out as a dividend. Revenues in 2016, on the basis of a like-for-like comparison, adjusted for all one-off effect, a slight increase by 1%, so I would call it a stable development. But what's important for you is that the foreign exchange effect on revenues amounted to approximately 60 million, and that was mainly from the British pound last year. So considering this strong one-off effect, it's a very satisfactory development of revenues. EBITDA, 404 million euro, up by 9% like-for-like. Almost 13 million from foreign exchange effects, mostly from the pound sterling. Other currencies also had a role to play. Then there is the contribution from Consolidation. The acquisitions that were made last year contributed 1 million. Earnings from the sale of non-core assets amounted to almost 18 million. You remember that we had a program to sell non-core assets, non-core real estate in the amount of 100 million. So we have almost completed this program of sales. And there is an effect from portfolio optimization in the amount of almost 3 million, particularly from the United States, where we sold 2 production sites for concrete pavers in the mountain states. All that against the background of cash flow from operating activities that increased by 28% to more than 333 million euro. A strong operating performance which is based particularly on effective management of working capital. Now let's take a quick look at the individual segments. Clay building or the divisions, Clay Building Materials Europe, higher volumes sold and slightly improved average prices were able to compensate for the significant negative foreign exchange effects. And we also saw a positive market environment in new housing construction in Eastern Europe and in some Western European markets. All that contributed to the strong increase in earnings. In the Pipes and Pavers Europe division, we saw a satisfactory development in the basic business, excellent development in Northern Europe, a good development particularly in the Netherlands and also in Eastern Europe. So in the basic applications we performed well, but we were hit by the steep decline in infrastructure investments in Eastern Europe in countries such as Poland. The market in Poland experienced a decline by almost 20% in the infrastructure sector because EU co-funding was not available. That was to a large extent due to changes at the political level. So there was a situation of standstill, which hurt us considerably in terms of our revenues. You also know that we normally do a lot of international project business from Norway and the Netherlands, major energy projects, power plants, deliveries for the oil and gas industry, our Soluforce pipes, and we saw a decline there. That is normally a highly profitable business, and we suffered from the fact that it went down considerably. Last but not least, our ceramic pipes, wastewater pipes of high quality for difficult applications. There again, there was weak demand in Eastern Europe and in Saudi Arabia, which used to be our biggest non-European market for ceramic pipes, was very difficult last year because no investments were made in Saudi Arabia in this sector. North America saw an excellent development, particularly in Canada, in the Ontario region, growth in single and two-family home construction. And in the United States, particularly in the southeast of the United States, we also saw a good development in the construction of single and two-family homes, which increased our sales. But because of the new structure of the market, there had been a merger of competitors. We did see a stronger pressure on prices. So let me summarize. Revenues stable at almost 3 billion, EBITDA 404 million. We had a very good fourth quarter. We saw significant growth in the fourth quarter. Of course, our business is strongly weather dependent, and thanks to the mild weather conditions in December, and also due to the fact that Christmas was on a weekend, so we had a longer working week there, and this meant that we had satisfactory results in December. In the fourth quarter of 2016, one or the other market presented itself in a more positive light. Belgium, for example, stabilized, but also high demand in France and the UK. The trends, which I outlined for pipes and pavers in Eastern Europe, continued. We saw no major change there, and the same holds for our North American business, which continued as before in the fourth quarter. If I may summarize before Willi takes over for a more complete presentation of the figures, we focus on the three pillars of our strategy. That is continued organic growth through innovative products, digitization is a major trend in many of our business processes. We have already launched the process of digitization, and this is gaining in importance from production to the use of our products. We had millions of hits on our website to download information about our products and how to use them. So we entered the digital world at an early point in time, and we have been implementing that successfully also in the context of BIM, Building Information Excellence, particularly building information, particularly in the United Kingdom. We're still focusing on operational excellence. We saved 7 million last year. We are going to pursue a very ambitious savings target also this year. And you will remember that our target is to save 50 million by 2020. And there will be growth projects this year. Last year we spent 44 million on growth projects, 2 production sites, clay block production sites in Poland and Romania, a pipe producer in Finland, and a paver plant, an extremely modern paver plant in Austria. So we're going to continue our growth projects, and we will go on optimizing our portfolio. I mentioned that we sold 2 production sites for concrete products in the United States. So we are going to continue optimizing our portfolio and exit from areas where we don't see a good future for the company. So that was a brief summary, and now I hand over to Willi. Good morning. Very briefly, our results. Revenues stable as compared with the previous year. Sales volume up by 1%, which is a good performance in our markets. As regards prices, we succeeded in increasing them by 1%, although inflation was almost down to 0. It's not so easy to obtain higher prices in a zero inflation environment. So through the 1% price increase, we were able to cover the cost inflation, but not more than that. It was a challenge already to obtain a 1% price increase, so a bit of inflation would help us, but the situation is the way it is. Consolidation effect, 1% of revenues. That is due to the acquisitions made in 2016, a brick plant in Romania, another one in Poland, and a pipe manufacturer in Finland. So the acquisitions were made in the course of the year, and the contribution is still relatively small, but those are bolt-on projects for us. That means companies which we can immediately integrate into our plants and where integration is going smoothly. And then the big negative effect is the foreign exchange effect. But here we are talking about translation differences, particularly from the British pound, minus 2% altogether. That means 60 million. Of course, that depresses not only revenues but also EBITDA. We try to present as transparently as possible what we mean by like-for-like and the organic growth of EBITDA. We are comparing 2016 on the right with 2015 on the left, adjusted for the effects of non-core asset sales and portfolio optimization. In 2016, 12.8% negative FX effect. Here it's shown with a plus sign because it has to be, the presentation has to be adjusted for that. But nevertheless, EBITDA was depressed by 12.8 million. Foreign exchange effects, about 8 million due to the British pound. In the first half of the year, 0.80 per euro. That increased to 0.90 in the course of the year. And I'm sure this is going to be an issue to be addressed also in 2017. But as I said, it's translation differences because we produce locally at local costs and we sell in local currencies. So it's not really a cash flow issue. The income statement, revenue stable, EBITDA plus 9%. With a significantly better margin. That is due to higher capacity utilization in our plants, and it's due also to cost optimization. 7 million saved. That is part of our 50 million savings program. Depreciation, 206 million, slightly above the previous year's level. That is EBITDA before special one-offs. Leads to an operating EBIT of 179. If we deduct the impairment charges to goodwill, well, that is accounted for by Steinzeug. That's our ceramic pipes business. Heimo mentioned it already. Steinzeug is facing difficulties in its end markets in Eastern Europe and also in Saudi Arabia, where our exports were discontinued. So that means EBIT 190 million plus 17% compared with 2015, despite higher depreciation and despite the impairment charges to goodwill. So income from associates, that is Schlagmann, our 50-50 joint venture, because the German market was performing better in the wall segment. Interest has gone down. Our net interest result has gone down significantly. We optimized our working capital. In the basis, we used to finance through cash. Now we rather tend to draw on a line in order to optimize our cash situation. And also in comparison with 2015, we paid back a relatively expensive bond, which is also reflected in the net interest result. The other financial result is better because last year we had a number of mark-to-market valuations included. So it's a financial result that has improved by 24 million, that is by 43%. Income taxes, 43 million. Most of it, unfortunately, cash taxes paid, but we are a company that operates locally, we sell locally, and therefore we have to pay taxes locally. And we do pay our taxes. I don't enjoy paying taxes, but if we pay higher taxes, it means that we are generating higher earnings, so that's okay. 150 million profit after tax, and what remains at the end of the day is 82 million net profit after non-controlling interests and after the hybrid coupon, more than twice as high as in the previous year. And if you look carefully, you will see 1 million less for the hybrid coupon. It's because we bought a hybrid for 6 million at the beginning of the year because the rate was favorable, and then we called the 2007 hybrid bond, which meant that the hybrid bond was reclassified from equity to debt, and that accounts for the minor change compared with the previous year. Now, the completion of the sales program. This year, we generated proceeds of 28 million through the sale of non-core assets. Contribution to EBITDA is 17.9 million. A lot of that in the last quarter. Traditionally, we work for the whole year to implement projects, and then this happens towards the end of the year. The figures do not include the proceeds of 5.8 million in the fourth quarter through the sale of concrete product plants. So, completion of the sales program, does that mean that we're not going to sell anything in the future? No, we still have approximately 8 million in terms of book value, and 5 million are going to be sold. Those are projects where we have already advanced in the negotiations, and we think that the sale can be made in the course of 2017. So it's going to continue, but not as strongly as in the past. Our free cash flow almost doubled. Part of that comes from working capital, normal CapEx, that is investments not only in maintenance but also in the improvement of our plants, our facilities. 137 million, the same as last year, and then 50 million from divestments and other income generated. Free cash flow, 246 million plus 111 million. Growth CapEx, 43.8 million. I already told you what that means for us. And then the dividend and the hybrid coupon, both for 2015, paid in 2016, and what remains is a net cash flow of 140.8 million available for growth projects in 2017 and also for distribution of a dividend. I think that's a good performance. Particularly when we look at working capital, there are two positive elements. One is the change in inventories. We paid great attention to that, and we also benefited from the fact that December was a good month. Whenever we sell something, it improves our inventories position. What is also included is the fact that we decreased our production in the UK in the second half of the year because we didn't know how things would develop after Brexit. But the market performed well, so we reduced our inventories. A change in trade receivables, mainly also from December, and change in trade payables. This is also a positive factor, and many of our investments were made in the third quarter. Working capital, change in working capital, an improvement, a significant improvement when you look at this position compared with the previous year. Total investments, 66% of depreciation is accounted for by normal CapEx. It's been like that for 2 years, and it has always been around this value. Growth CapEx, 43.8 million. It's not just acquisitions, but also the expansion of production capacities. We built a new paver plant in Austria. We enlarged some of our production lines and increased our capacity. Net debt is higher at the end of the year, but this is only due to the fact that the 2007 hybrid bond issued in 2007 was called in mid-December, so it was converted from equity to debt. If that had not happened, our net debt would be 390 million. That is below the EBITDA of 2016. That shows how strong we are in generating cash flow. 240 million for the hybrid bond. That is the principal which has to be reclassified at market value. And the coupon, which is also reclassified to debt, and the 6 million, which we also redeemed at the beginning of the year. Now, what are the effects of the call of the hybrid bond on the balance sheet? It's reclassified from equity to debt, and I can reassure you, we paid for that already. It all went very well and smoothly. When I take a look at the liquidity reserve, we have, here it says credit lines 550 million, the 400 million RCF plus a funding loan which we obtained with a coupon of 1.2% over 8 years. That means an improved financial position in the coming years. 80 million drawn from RCF. That means for all redemptions, including the 2007 hybrid, we have more than enough funds. We have very few redemptions to expect in the coming years, at a very low level and well balanced over the years. There are no individual years with high redemptions. Net debt, including the hybrid, 27, 1.6. Net debt to EBITDA, and that again reflects the strong cash flow of the company, and Moody's gave us a positive outlook. We need a rating. We have a rating. But we show a good performance, a good key financial figures, and this allows us to recommend an increase of the dividend by 35%. As you know, for our dividend payments, we always base ourselves on the generation of free cash flow. On that basis, we decide what we think is appropriate for a cyclical company like ours. And we always said we want to be in a corridor of between 10 and 30% of free cash flow after hybrid coupon. And we also said that we intend to pay an increasing dividend, and this is why we are proposing a distribution of 31 million in terms of dividend out of our free cash flow. And when I look at our cash flow and when I look to the future, I think this is quite appropriate, and it shows that we are confident for the future.
Thank you, Willi. Ladies and gentlemen, let me talk about the individual segments, and you can see the revenues in the amount of 2.973 million. As you can see, from today's perspective, Wienerberger has become a Western European company. The revenues and earnings come from Western Europe, and this includes Northern Europe as well. As you can see, we are also strong in Eastern Europe, and there has been growth in the clay building materials sector. The developments in the infrastructure sector in Eastern Europe and also outside Europe explain the negative results in pipes and pavers Europe. There has been growth in North America. However, when we look at the individual products, and I would like to point out that the total margin has improved to 13.6%. You are familiar with our target margin, around 20%, and we are approaching this figure. So we are moving in the right direction. Roofs, more than 20%. So EBITDA in the roof sector has reached the desired results. Facade, here we said we want to achieve between 18 and 20%. We are stronger in the United States than in Europe, so we are aiming at 20% more or less, and again we're moving in the right direction. Pavers, here we still need to catch up. We have not yet reached the 12%. And the same holds true for pipes, where we stand at 9%. And there's still room at the top. And we hope that markets in Eastern Europe will improve. So altogether, the development has been positive, and we are moving in the right direction. Let's take a look at individual segments in greater detail. Western Europe, a significant organic increase, almost 16%. This includes the effect of the United Kingdom, the foreign exchange effects. We have seen, however, that the market in the United Kingdom has improved again. You will remember that we talked about the supply chain. Here we have noted a normalization of inventory levels, and we expect that altogether the market in the United Kingdom will behave in a similar manner in the next 6 months. Why do I say 6 months? You all know that the new government published a white paper on the housing market, and it is committed to provide the necessary real estate for housing projects. So these are necessary incentives. The new government will simply have to implement all these plans. In the Netherlands, we have seen an upturn in the market. There was a slight slowdown at first, certainly due to the developments in the United Kingdom, but altogether sales volumes and earnings in the Netherlands have gone up. In Belgium, we have seen that despite lower sales volumes, the situation has improved. Belgium is a very important market for us. Germany and France, here we have a revenue and earnings growth as regards clay block sales volumes, and we have clearly been able to improve and increase our market shares in those two very important markets. Just for the sake of completeness, let me say that Italy and Switzerland are fairly weak when it comes to single and two-family homes. Next, Eastern Europe. Here, again, thanks to increased demand in countries like Hungary, Romania, and Poland, we could increase our margins. We are clearly above 20%, so this is highly satisfactory. The market has picked up as a result of initiatives in the housing sector. So this shows that there is still a potential for further growth. The integration of Tondach and also the clay block sector are very positive. So again, here we are seeing significant growth. The only market in this region where there was a decrease is Russia. There's a lack of funds, and also there's inadequate consumer trust or confidence. Pipes and pavers, Western Europe. Here, Northern Europe, of course, has a decisive influence. You can see a slight decrease regarding earnings and volumes or revenues. Netherlands and Norway have a very profitable international business. This, of course, had a considerable impact. And you can see that Pipelife has made a very valuable contribution. So again, here we have a success story. Ceramic pipes, we've already mentioned the fact that there were negative impacts as a result of the poor economic environment in Eastern Europe. But basically, the development has been positive in view of the economic situation in some of the countries. Eastern Europe, here again, there were delays as a result of the EU subsidized infrastructure projects, but again, we could stabilize the situation. But of course, these developments had an impact on our activities. North America, here we had one-off earnings going back to 2015, which contributed 12.6 million. Last year, it was 9.5 million contribution from the sale of non-core real estate. And there were shutdown costs for one facing brick plant, which totaled 2.9 million. So basically, the development in the United States has been very positive, both in terms of volumes and prices. And regarding plastic pipes, we are confronted with growing pressure from competitors, which of course has an impact on pricing. Altogether, though, the development was positive. The outlook for 2017. Well, some of you will say that our outlook is very conservative. This definitely is not true. We are trying to assess the market development to the best of our knowledge. So here we've listed a number of topics that will keep us busy throughout 2017. The financial markets, the political situation, elections are coming up in a number of European countries. All this will mean instability, and we will be achieving good results in all those markets. So Wienerberger, of course, is strong enough to implement its projects, but we need to consider the factors that will definitely have an impact. We're still in the first quarter of 2017. The winter has been colder. January, February, lower temperatures, snow, particularly in continental Europe, where we have our core activities. So the situation is more difficult than last year. I don't want to make a negative forecast, but I'm just pointing out that the winter months this year were colder. So this has to be taken into consideration when we talk about the outlook for 2017. Let's take a look at the individual markets. Clay block facing brick and roof tile activities. New housing construction and roof segments. Here we will focus on renovation. The situation in Europe is positive. There are no red markets, as you can see from this map, with the exception of Russia. This is a country where there's still a recession going on, but in all the other countries we have a stable situation or growth. This holds true for Central and Eastern Europe, Western Europe, and also for North America. So we hope that we will find a positive situation in all these markets. When we look at pipe activities, you will probably remember what I said last year about the outlook. Again, the forecast is somewhat more negative. Look at the markets. Poland has been mentioned. But we expect that the economy will pick up in the second half of the year. And also we hope that there will be more EU subsidies also in the second half of the year. So overall, again, a positive situation. Let's take a look at the details. We expect a slight growth in new construction. There will be a bit of restraint in the renovation segment in Western Europe. This is something that we need to bear in mind. The roof market will be profitable. There will be an increase in new housing construction in France and Germany. There will be a positive development in the United Kingdom in the first half of the year. We cannot make any forecasts for the second half of the year yet. A slowdown of market growth in the Netherlands. There will be growth, but it will be smaller. And there will be a stable development in Belgium, Switzerland, and Italy. The market in Eastern Europe will be positive. We expect a positive development of the economy and demand, and also new construction and renovation measures supported by government subsidies will contribute to this positive development. And we will make sure that our production capacity meets this demand. Pipes and pavers, here we see a healthy market environment in Western Europe. we feel that there will be a potential recovery in Eastern Europe in the second half of the year. And we also envisage a stable development in the international project business. So we don't expect any major changes over 2016. Of course, we have to consider oil prices and the development in the Middle East. This will impact our investments. Altogether, we see that there is continuous and increasing interest from major investors in this region. Pavers, again, a difficult market, but we expect that in North America there will be a positive trend in the single and two-family home segment. Plastic pipes, here we expect increased demand in some of the regions, but of course this is not certain. It may be that demand goes up, but probably price developments will be similar to what they were last year. So, our guidance. Of course, here we focus on one figure. We are all aware of that. But as you can see, we expect an increase in sales volumes and prices, on organic growth, and also savings from operational excellence. So we should be able to reach the 415 million. What is not included, of course, are foreign exchange effects, potential foreign exchange effects, which we cannot predict. Also, consolidation effects. When it comes to acquisitions, we do not have any specific or concrete plans or projects, but there may be one or the other acquisition. Earnings in this regard have not been considered. Also, what we cannot predict is the effect of the sale of non-core assets. One of the major projects has nearly been concluded. We will have a few smaller projects, which and we are going to sell some of our non-core assets. Another point that has not been considered in this outlook is the portfolio optimization. We have sold 2 production sites in Northern America, and we are going to take a close look at our portfolio. We will consider what we can do in order to optimize the portfolio. So these points, as I said, have not yet been included in the outlook. For 2017, we expect negative foreign exchange effects, but also positive earnings contribution from the sale of non-core assets. So these should compensate for the foreign exchange effects, at least from today's perspective. So let me summarize. Organic growth, the target for this year, like for like, 9%. So a very strong organic growth. This needs to be underlined. Depreciation, here we feel we are safe with 190 million. Net interest result should be around 30 million euros. Working capital, as Willy van Riet pointed out, we ended up with 20% for 2016. But again, we have to point out that we need to consider the influence of weather and other factors. So we expect that the 20% are reasonable. Normal capex, no big surprise, 145 million. We will be careful when it comes to investment. It means optimization, improvements, and it also means operational excellence. And of course, product innovation. For this year, we also expect growth capex. We see an opportunity for further growth investments because they are attractive and interesting for Wienerberger. So we expect the figure to be about 25 million. However, if something interesting comes up, the figure may be higher. I don't want to preclude that. So this is our guidance for 2017. Summing up, I would like to repeat that we are going to pursue our successful strategy, that is sustainable growth of free cash flow. We've been successful in 2016. Financial discipline. Net debt is less than 2 at year end. We can pay our debts back within 2 years, and there will be a further optimization of financing costs. We will have normal capex below the depreciation until 2020, and with the 145 million, I think we are quite safe. Normal capex will focus on value creation, additional value creation. And in 2016, there were a number of investment opportunities that we considered in North America, for instance, but then we rejected them because we felt they were not sustainable. And finally, dividend payouts to our shareholders. We will pay out a dividend only when we have free cash flow, and 10 to 30% of free cash flow after paying back the hybrid bond are very positive. And of course, there will be a periodic evaluation of share buyback programs. So, our strategy, we certainly do not plan to change our strategy year by year. We have a very consistent strategy: organic growth, as I've already mentioned, innovative products, increasing digitization, about 1% of our revenues, that is to say 30 million, will be invested into research projects. Then operational excellence, 15 million. We want to achieve continuous cost and process optimization. And of course, there will be growth projects, selective bolt-on projects in core markets, and portfolio optimization. So we are optimistic to come a step closer to our target of 600 million. Thank you very much for your attention, and we are available for questions.
Thank you very much. You are now welcome to put questions. I have a question regarding the pipe business. We hear from other companies that conditions in the oil and gas industry have improved significantly in recent months. Is that something which you have noticed as well? Perhaps you could give us some details about the development of volumes you expect in this sector. And then the buyback issue. What are the essential criteria on the basis of which you perform your evaluation for a share buyback program? Our balance sheet is cash flow driven. We always look to the future and to the plans we have. We do want to distribute a dividend, and we also told you how much we intend to distribute. We're not yet in a position to say now what the criteria are. We have no projects yet. We are at the beginning of the year, and you shouldn't forget that we are a cyclical company, and cycles may change, and we need to be prudent also when it comes to our capitalization. We have 270 million of a hybrid bond to be called in 2021. This is something we need to take into consideration, and we cannot yet communicate our capital buyback program for the time being. As regards your first question, when you look at special applications of pipe life, that is the plastic pipe business, we have two main activities. One is large length, large diameter pipes, which are used for energy projects, power plants, on an international basis. And this is a cyclical business. It depends on whether financing is available for such projects. It's politically driven, but this is beyond our control. Demand for such pipes is expected to be what it was last year. We don't foresee any major changes. As regards the fiber reinforced pipes, which are being offered as a substitution product for other pipe systems, for example, for steel pipes in the gas and oil industry. For this, here we see considerable interest also from the Middle East. Increase in such fiber reinforced pipes is increasing, but I can't tell you yet that there are going to be orders coming in because there is so much political instability in that region. So we are optimistic. We would be able to deliver such products, but from today's perspective, I can't tell you yet that there is going to be a significant increase. What is your capacity utilization in the brick plants, and are there major regional differences? Well, the average across the group is 70%, but there are major differences between the regions. In the UK, if things continue the way they are now, we will reach 100% capacity utilization. In the US, we're going to be around 60-65%. And in Europe, there will be one plant will be demothballed in Hungary, and that tells you that we need more capacity in the market, and we are confident that the increase we're seeing in housing construction is sustainable. As regards roof tiles, we are well prepared and well equipped, and as regards clay block plants in Eastern Europe, we are approaching 70-75% utilization. When you look at our results in the brick segment, we have an EBITDA margin in Eastern Europe of 20%, and that drives utilization up. And what we are seeing now, or what we are thinking about now, is that there is a trade-off between transport costs and the reopening of capacities. So step by step, we are demothballing plants. We're going to look at the market in Poland, where we have already bought additional capacity. So on average, capacity utilization is approaching 70%, and more than 70%, but we're not yet working at full capacity. The UK market is doing very well currently, and we have enough capacity on the European continent, and we may be exporting products from the continent to the UK. So across the group, capacity utilization is above 70%, but there are major regional differences, and the United States is also moving up in terms of capacity utilization, fortunately. Any further questions? The renovation market, because of low energy prices, was rather subdued in the past. Has anything changed in recent months? And what's your outlook for the renovation market? Well, in principle, nothing much has changed in the renovation market. We take it that the major renovation markets like Germany, France, and the Benelux countries will be similar to what they were in 2016. In some places, we can see slightly more positive signals. In Belgium, for example, there is a government support program for renovation, particularly for measures that concern roofs, the facade, windows and doors. So there are specific measures there in the Belgian market, but not yet in other countries. It won't happen before the elections in Germany and France. So I would say that our best guess is a stable development. Any further questions? Well, if there are no more questions, I close today's event. Thank you very much for attending, and I'd like to draw your attention to the presentation of the Q1 results on the 10th of May. Then we're going to inform you about developments in the first quarter. Thank you very much.
Yeah, thank you.